Hi, everybody. Welcome to another episode of Not Another Fucking Podcast. Today, we're here with Torsten Reitz, and very, very grateful to have you on. So cool. Torsten, if you'd like to introduce yourself and
Thanks for having me. Yeah, I'm Torsten. I'm from Germany, and so since we're basically talking about Web3 today, so I've been in the space for 4 years now, roughly. So got in towards the end of the last bull run. So stupid retail investor back then. Buying it at the very high end, and then during my first year or first year and a half, saw Bitcoin drop from, well, let's put it in to make it more plastic, from 70K to 17K. So yeah. So yeah, been around, been in the space since then. Working for a couple of projects, and we can talk about all of that. Yeah, today.
cool, awesome. Yeah, I think the kind of like pullback from for people that are here from because I was in since like 2017 or late 2016, and seeing the pull down from like 20K to 3K didn't seem just seemed a lot more extreme than 77K to like 16, 17K, right?
Yeah. I mean, it was like 69 something to 16 something, but I just thought that 70 to 17 sounded a little bit cooler, so I went with that.
Dude, it sounded sexier.
Yeah.
But then that's a crazy thing, right? Like, and then I guess if patterns follow, there will be another huge pullback, and I wonder what the bottom price is for that. Are we at the top yet, or is now going to be back to the bottom? So it always will be more than the previous cycle. So I don't think we'll tip. If anything is to go by previous cycles, right? Like there's no guarantee in anything, but I don't think we'll see anything dip lower than 70K because that was the bottom last.
Yeah, would be my assumption as well, but you never know. And I mean that's exactly what we've been thinking about when it comes to the first project I'm currently involved with.
About it.
Yeah, that's Satoshi. That's the first smart DCA platform for Bitcoin, and we're launching that pretty soon. So yeah, because we saw that the pain point for a lot of people when they invest in Bitcoin is the volatility, right? So because you have those extreme drawdowns, drawbacks, those extreme corrections, or however you want to call that, and especially for the less seasoned retail, I think that kind of spooks them out, yeah. And it makes it harder for people to have trust in investing in Bitcoin, even though it makes perfect sense when you have a look at the long-term chart. Yeah. So that's the problem we want to solve. We have our own proprietary AI quant technology that we use for that, and we backtested that, and over 5 years, and it's outperformed regular standard DCA by 833% in that time.
Wow.
Yeah.
So what does it buy at the best times for the thing? Is it like the more advanced DCA?
Basically the swing trades, and so it sells off when it recognizes a local top, and it buys back in when it recognizes a local bottom, and by that it improves your DCA buy-in dramatically. And what is even cool about the backtesting results is that it did all of that while keeping 45% of the deposit in cash, in stables. So and then basically it swaps between Bitcoin and stable whenever it gets to the conclusion that we've seen a local top or bottom. And it uses over, I think, 5,000 different data points. So that's the one part of it, and the other part is what you get on top of it. If you access our terminal, is you basically get a ChatGPT specialized in Bitcoin, so you can ask it all sorts of things about Bitcoin on top of it.
What is it? So he's kind of like your target audience for that. Is that more institutional? Is it retail investors or both?
Yeah, both. I guess if you want to put it in a nutshell, we see ourselves as kind of like a little bit of like Swan Bitcoin, but with AI, like a really, really good AI. And so that's where we're trying to head, and we want to make it as easy as possible on the users. So it's basically that you can log in Web2 style if you want to, with username or email and a password. And you can also deposit money with credit card or maybe even bank transfer if you want to. But it's perfectly fine if you want to connect your wallet in order to log in as well. So yeah, we're trying to make it to give it as little friction as possible for people to use it, you know, because I think that's been one of the key issues, the main issues in Web3 is the usability, user interfaces, and user experiences. Most platforms, especially in DeFi, for example, is pretty clunky. You know, I mean, you're perfectly aware of it, right? So yeah, that's another issue we want to solve because yeah, if we want to onboard like mainstream users or the vast majority of people who might be interested in Bitcoin, then you need to make it as easy as possible on them, you know, to use your product. Yeah,
Definitely. I think I think that's why Phantom Wallet's done so well, right? It is Phantom, yeah. Because it's kind of, as a Solana wallet, it's quite simple to use. And so retail have just kind of like latched onto it. And you're absolutely right. There are a lot of DeFi protocols that are just very complicated on how, in terms of like where you need to get your tokens to, different chains and stuff. I think people are starting to understand, at least those that sort of explore crypto on a surface level, understand the different layer 1 chains and layer 2 like to kind of trade on. But when you talk about bridges and stuff now, the app like Phantom has it all kind of inbuilt, and MetaMask I think has now incorporated that too. But
I actually prefer Rabby to MetaMask as changed from MetaMask to Rabby a few months ago after years of using MetaMask because I find the user experience is so much nicer. Because you don't have to change the chains manually, gives you a much better overview of what you're actually doing, and even can show you the DeFi positions if they're accessible in DBank, for example. So because I think they're the same company or the developer, the same company as DBank.
That's interesting.
Yeah.
That is kind of like an interesting thing, I think, as well. If we like touch on, I feel like MetaMask personally hasn't done much development. You know, they were.
I would agree.
Yeah, they were the first. They were, one of the biggest utilized wallets, especially in like 2020. But like they've been around for such a long time, and they had a huge opportunity because they were the first, I think, most utilized wallet apart from like self-custodial. Well, I mean, it is a self-custodial wallet, but it's a wallet you can connect across multiple chains and stuff. And I think they've really missed the boat because now you've got all these other competitors that have just appeared and are just superior.
I mean, and I felt like with each version that they come up with as of late, they introduced new bugs that make it even clunkier to use. Yeah. So I mean, and even what I liked, what made me stay with it for a little bit was that okay, now if they're finally going to incorporate Solana, then that might make me stay because then I'd only need this one wallet extension for all the main chains that I'm using, right? So, but even that, I haven't even tried it out myself, but from hearing from people who tried this, it didn't work. It wasn't working at all. So it was a really bad experience. So they went back to Phantom. So yeah, and I mean, then what's the point if the EVM experience is clunky and if the Solana experience is not really working? What's the point of staying with MetaMask?
There's no point. Yeah. That's interesting. But yeah, I've definitely kind of transitioned to using a lot more Phantom, for example, as an alternative. But even Phantom doesn't have all the EVMs. But it's for the ones that I want to use it for. It's just easy and seamless. But yeah, so that's interesting. That's kind of like a really interesting proposition. So going back to your you obviously want to make it sort of very user friendly. What is kind of like the price point for people to use it? Like,
well, there's no price point to enter, but we would take a small platform fee and we'll take a performance fee if it performs. So there's no price you need to pay in order to get in. So it's not like a subscription model or whatever. But
but you take like little cut or whatever they trade. Fair enough.
Yeah.
I mean, that's great. Like, I think
Yeah.
it's something that would be it would appeal a lot to like kind of DCA maximalists that don't want to
Yeah, of course.
don't want to kind of like worry about it too much and just let it do its thing. Then that's cool. That's cool.
Yeah, I mean, so it's already attracted some investors because we've $40 million in commits from VC groups already.
Amazing. That's really cool. What do you think is like quietly going to become, like, your personal opinion, going to be the next big thing in Web3? And do you think there's a lot of noise at the moment? Like, would you think that it's over too much in terms of like meme coins taking the narrative too much, like projects not getting the attention they should do?
Yeah, well, I think we're seeing a slow shift towards utility projects. What's one big thing right now to me is real world assets. Especially with Ondo Global Finance having launched their marketplace a couple of weeks ago. I mean, it's not really that accessible yet, especially to US users, I believe, which is most likely their biggest market.
Yeah, it's funny because Ondo is a US project.
Yeah. But I mean, I think that has to do with them needing to get the legal framework in order first, right? Because the Clarity Act hasn't come into effect yet, so that I think that's also what's delayed all of that. I mean, the situation looks much better, obviously, in the US than it did like a year ago before Trump came back to office, returned to office. So I guess they were making a lot of progress on that front. But yeah, I mean, it's nothing you can do from one day to the next, right? Start the tokenization of all the major stocks in the world. So yeah. So, but I can see a big market there, and what's exciting to me is that you'll be able to use all those tokenized assets, for example, in the DeFi space.
Yeah, I do wonder about like how utilized that will be in terms of like having to tokenizing stocks, basically, right? Like that's what a huge movement is going to be. And I do wonder. I think there are some benefits, obviously, like 24-hour trading. That's going to be a big one, right? But outside of that, I don't like. It's not too difficult to buy stocks these days, right? With the onset of like apps like Robinhood and stuff.
Yeah.
So,
but what I like about it is that is the self-custody aspect for one, because you don't need a broker anymore. That's one thing. So right now, because right now you basically have to use a broker to hold those assets for you, because you can do it on your own. So that's one big thing. And the other big thing is, you should hopefully be able to use them in DeFi strategies for
that's really
liquidity. Yeah, liquidity providing, lending, staking. And that will be the big thing, because now you can use them as yield-bearing assets rather than having them sit around and maybe you get a dividend or maybe you don't. So yeah.
That's cool. That's cool. And that's interesting because that's a way where there's a lot of stocks these days that obviously aren't they aren't dividend paying, right? You have like a lot of additional stocks that did, but now don't. And so you can
big techs
potentially,
for the most part, or if they do, it's next to nothing.
Yeah.
For the most
And I think big tech's benefit has always been, yeah, we might not pay out dividends, but it's worth holding our stock because look, it's 10x, 20x over the news, right?
Yeah, of course. And
So
the last 3-4 years, for example.
crazy. What I do think about that, or actually that whole world, and just us talking about it is getting my cocks thinking, is that I wonder if the market caps of all these companies are going to skyrocket as soon as people can just easily buy it, right? Like, I know it's not too difficult to buy via Robinhood or other platforms, but you are right. It is kind of like you're still at the mercy of the broker, essentially, because it's just a more.
What might be also interesting, I think, is that you can actually fractionalize them.
Yeah, so you don't have to have the whole stock.
But for example, if there's some stocks like a regular Joe can really afford because it's so high. So it's not really doable to get exposure. I mean, there's some neo brokers in Germany, for example, where you can do it. That probably exists in the UK as well, where you can buy fractionalized stocks. But the problem occurs as soon as you want to transfer them to somewhere else because that's not working. I know what I'm talking about because I was using one of those, and then I moved out of Germany for a little bit last year, and so I had to transfer my assets to another broker that was working internationally because they might have closed down my account because I wasn't residing in Germany anymore for some time. So yeah, so I'm very aware of those issues that can occur because I had to transfer my whole shares and then had to basically sell off the rest. Yeah, the small doses of them that I couldn't transfer.
That sucks. Yeah. Well, then there you go. That's one kind of like one good reason for it. And I think also this sort of ties into, I was talking to someone about this the other day, the utilization of like stable coins, right? I don't think people realize how much that will change and how little we'll have to use banks if we just utilize stable coins on chain, right? I mean, I suppose there's a risk of the only risk I really see personally is the risk of fraud, right? If you are affected by fraud for whatever reason, in most instances with banks, especially with credit cards, you can make a claim to get that money back. So that's kind of like the safety element of it. But outside of that, you're pretty much at risk. Also, if the bank goes defunct, depending where you are in the world, right? There's obviously there's a certain amount in the UK. I think it's 80,000 that you're protected to.
Yeah, but then that's that you can put an asterisk next to that because even that's tied to conditions that might not always kick in. So yeah, so you're never perfectly safe even in a regulated or over-regulated environment.
It's true. But I did also think, as we right now, it still seems a bit of the Wild West to sort of like the layman person, right? Like they don't really understand Web3. And if I told them, hey, you could spend your USDT in a shop and stuff, they'd look at me like I was crazy. But I think if we're going into the future, things like that are things that worries that I have now might not exist because there might be forms of insurance you have as protection against fraud. More sophisticated ramps or maybe particular wallets where they'll be like, hey, if you use our wallets, we'll make sure you're protected against fraud. Therefore, incentivizing people to utilize their platforms, and then they could take, because every time that's sent, all these wallets can potentially, take a fee if it grows to the level. And yeah, I don't know. What are your thoughts on all that?
Yeah, and I had this discussion with one of my communities actually the other week, I think last week or so. We were talking about that, the seed phrase concept, and that we're still tied to the seed phrase concept rather than using, for example, different methods for validating who's actually behind and who's the owner of the wallet. So because nowadays you can do it with biometrics, theoretically. Same way you do when you log into your computer or your smartphone or whatever. So there's probably ways to do that in another way than having to memorize a 12 to 24 word seed phrase, right? Yeah.
Which is
but because that's also, I think that's another factor that makes things more complicated for the less tech savvy users. So yeah.
And also kind of it always puts you at risk, right? Like that 24 words seed phrase, like it's at risk someone finding it. If you've written it down, you could memorize it yourself, but my God, imagine, like, I know how many wallets I have, different chains and things, like there's no way you can keep on top of that. But if anyone watching this, I do have it all in my head, it's not written down anywhere.
Yeah. So but I mean what I like, for example, from Ledger is that Ledger allows you to add a random 25th word somewhere in your seed phrase. So you can choose a position, you can even choose the word. It doesn't have to be any word from the set, from the regular seed phrase that so you can just put some random word somewhere in your seed phrase. And so for example, then if you have that, then it's probably next to impossible to hack the seed phrase, right? As long as you don't put a 25th word on a sheet of paper. Yeah. So you just have to memorize the position and the word that you added to it. So that's the whole point. But I guess it's easier to do than memorizing all the 24 words in the correct order.
It's true. And yeah, exactly. And so So yeah, so I think it's very interesting, kind of like in the real world asset. I agree. I don't think we've seen. It's one of those things where I think same with NFTs. The last run, I see the potential,
Yeah.
but we've not seen it unravel, right? And we might not know how it unravels and what becomes of it. It's one of those things that we can make all the predictions we want, but until we start doing it, before we start doing it, it doesn't really work.
Even though I wasn't actively around back then, that you have all those institutional players in the market now, right? So whether it's those treasury companies or whether it's BlackRock and co. Buying into all of those things and want, because BlackRock's basically promoting Ondo. So a big proponent of Ondo. So I think that will happen regardless, just because BlackRock with all its powers is forcing that to happen. So whatever BlackRock wants, they get, right? So
It's true,
basically, yeah. So that's why I see the ship there, and yeah, I mean, what we also, I can also see the AI narrative coming back, of course. I mean, that's why we're so big on Satoshi, because we see the enormous potential that has. I mean, not all of the AI agents that are out there will make a comeback, I guess, because the market was flooded with them at the beginning of the year. So everybody was launching something on virtuals, for example. So yeah, there might not be a use case for all of them. So probably the market will sort itself out in that regard. So some will come back, some won't. Yeah, but I think it's probably a matter of having USP among them, right? So yeah. DPIN is still something interesting to me.
How come?
Yeah, because I mean, so far all those data centers or all those the hardware has been done, and the rendering and all of that, for example, has been done in centralized data centers, and that this is a kind of unhealthy concentration. I mean, I know why, because you need all those resources, processing resources, and the storage resources. So yeah, there's a valid reason for building big data centers, but at the same time, that's a security issue. I mean, we're living in a world that's it sees more and more conflict. So somebody's fanning the flames to stir a fire. So and then if you have all the data storage, those data centers in some centralized locations, then they're prone to attacks. So that's one reason. And the other thing is, if you decentralize it, allows more people to participate in setups that they normally wouldn't be able to do. Like, for example, if you can do GPU rendering on somebody else's computer that's more powerful without having to use Amazon or Google, then that's not the worst thing in the world either, right? I mean, it's just probably an idealistic view, but yeah, for me, I find it interesting. I mean, I'm not sure I'm not sure how that's going to end or how that's going to develop, but I see certain potential there.
Do you think that we're moving into a more, because this is really the foundation of what the whole Web3 space kind of built on, right? Is decentralization, completely removing autonomy. You're just giving everybody the autonomy to kind of control their own assets or have control over their own projects, and also not be at the mercy of any centralized government entity, company, bank. And so, but we are seeing a lot of these kind of traditional centralized authorities coming into the space now, right? And it's like a double-edged sword, really, because on the one hand, right, bringing all this institutional money into the space has clearly made grown Bitcoin to where it is now, a parabolic state. Like we've had, I think, over the last few months, when it dipped back down to 70,000 and ran back up now to like where it is 115 today, maybe, or 115, 116
today, but
yeah. And so it's around that point now anyway. A lot of that was due to to institutional money coming in. It wasn't due to retail because
Now,
there was no news about it.
Yeah, retail's only like rediscovered the crypto market in recent weeks. Now that everything seems to be on the verge of pumping again, right? Yeah. So now that we're heading into altcoin season, hopefully. Yeah.
Yeah, no.
Yeah. So it's an interesting but kind of weird cycle. Yeah. So
It is.
I agree with you. It's a double-edged sword. So it's bit of a contradiction when it comes to the blockchain ethos and what crypto was all about, or was supposed to be all about originally. But yeah, so I'm kind of torn as well. But yeah,
It's one of those things. It really is. It is difficult. So yeah. So we'll see that sort of happening. Do you think that is happening? Like it is, even though all these institutions are coming in, is it all becoming a lot more centralized, controlled, or under it all? Do you think, because obviously we were talking about real world assets, and you know, that the whole world of that, if we bring stocks on chain, or I think in really interesting spaces, real estate, you know, doing things like that, because then you could have a fractional ownership of property. Like how do you think that is making it more decentralized? It's making it more accessible to everybody, which is always a good thing, right?
Yeah, accessible, but not necessarily more decentralized. I mean, in terms of custody, yes, but when it comes to the issuers, those are still centralized entities behind it. I think it doesn't matter if it's a stable coin or a stock, or let's say fractionalized real estate property. So all of that is effectively issued by a centralized entity that's behind it, right? So that's not much of a change from TradFi in that regard. But yeah, I perfectly agree with the accessibility, because you don't have to rely on banks and all those traditional institutions to get access to it anymore. So that's the key difference, I would say. Especially because I mean, we still have parts of the world where there is no proper banking system, where people don't have a bank account, and where people don't have access to credit cards. And so how else are they going to participate in a global economy?
Yeah. Well, and that's the other side of it, right? Like it's sort of a beautiful thing that a beautiful thing that hasn't been tapped, right? Like imagining all those people have that, and if they're in somewhere and they have excess capital, you know, maybe they don't, maybe they are working, but if they do have that excess capital, now they, you know, can participate in US stocks potentially. That's great.
Yeah.
I think this cycle, and you kind of talked about it a little bit, we'll mention it. It is actually, this cycle has been the emergence of trade, like traditional finance with decentralized finance. That's really what's happened this time around. Like, because I remember in the last cycle there was a lot of DAOs, and I just feel like that's not a thing anymore.
And Powerbot, that's my other project.
But I think they're not at the forefront as they were. You know, the last cycle. I think they're great. I think they're a really interesting way to run things and manage assets and stuff. And I hope they do make a comeback, because I think that is the answer, right, to this whole is having a decentralized organization that buys the property that then can be fractionalized ownership, right? Because then
it's interesting. Now it's interesting because you can see it go two ways. Both ways right now, because for example, MakerDAO is just rebranded to something else because they want to get rid of the DAO aspect. We're talking about a big DAO here, right? Whereas I listened to a German podcast this weekend with Xent, who's a developer of really probably the most secure privacy software in the world. He went to jail for that for a few years because they tried to I think they tried to put on him that he hosted dark websites in his data center in his bunker in Germany, and that's how they got him. So they basically told him he was part of an organized crime or criminal organization without being part of it. So it's kind of weird that what they came up with to put him in jail. But anyway, so that guy lost all of his money when he when he was sentenced to jail, and in the process, and he's in the process of he's in the middle of creating this all-in-one app, or a super private app, privacy app that's supposedly even safer than Signal and all of that. And he wants to do crowdfunding. He wants to do a DAO for it. Also for the checks and balances of for example, checking out new features, checking it for security issues that might come up, and all of those things. So, well, I think what his idea is that I think he's in the late 60s now. So after he's gone, that it's basically they will become like this self-governing entity that will live on after he's gone. So that I found that interesting. So it's just trying to sum up 2-hour podcast in a minute. 3-hour podcast. Yeah.
That's very interesting.
That interesting. Yeah. Yeah, because that's where I can see this makes sense, because then it's not totally in the hands of one person or a small group of people.
Yeah.
That control everything, right? So yeah, that's then back to the decentralized ethos also, which makes sense in the privacy context. To me personally, yeah. So
For sure.
That's
I think as well, like with Signal, like just talking about that, I think maybe I misheard I'm pretty sure I heard somewhere that Signal had, like, the CIA have a backdoor to Signal. I mean, I'm pretty like the CIA have a backdoor to everything.
Yeah. And I mean, WhatsApp, that's a given. Telegram, yeah. Pavel Durov claims one thing, but can you be sure? So, yeah.
If he's not in prison, then maybe not. Like,
and you never know if it's not the CIA having access to it, then maybe it's maybe it's a different secret service from other countries. So that's much better.
It's true. I mean, although I do wonder, like, I'm a kind of an advocate, and I think a lot of early kind of people into the space are of some sort of privacy, and but I wonder if most people just don't care, right? Like, I wonder because if it means easy access to things and tools and utilities, I don't know is the answer. It's like I feel like everyone has a level of, they don't mind an X amount of their data going out. But I think if people knew the full length of what companies know about them, they wouldn't be happy with it. But they don't, right? They just have they have a surface level understanding of what they might know, and they're like, I like using G Suite. I like using,
I think it's
these tools.
It's a matter of people being comfortable with using certain products that work for them. They're not really willing to change to something else because there's a learning curve behind using those new products, right? Because I can remember trying out all those different messengers back in the day. Signal, Telegram, of course, that's still used, but mainly for all those crypto discussions that I'm in right now because of Satoshi and such projects. And I even used Streamer, but I just gave up on it because I couldn't get more than a handful of my contacts to actually join me. So yeah, so that's at some point you're just asking yourself, okay, what's the point of keeping all those apps on your phone? Nobody is nobody else except for you is using it, and you're preaching to a choir you can convert, right? Yeah.
It's true though. It's true. There are way too many apps, and I think what needs to happen, it's kind of the network effect, right? And people are just a bit jaded by the network effect. And I think Telegram has been a thing for crypto. I think that's what's really driven Telegram as a platform. In my opinion, maybe people use Telegram, but not as much as other kind of. I think WhatsApp is probably the most used messaging, and I think WhatsApp only got its dominance because iPhone had its own messenger app, and then there wasn't something for Android users, so everyone just started utilizing WhatsApp, and then that became the sort of standard for everything.
Yeah, first mover advantage. The same thing as with MetaMask. we were talking about earlier, right? Yeah. So, and once you've established yourself as this one, as the first solution that kind of works, it's harder for maybe technologically superior products to come in and take your place, even though they might be much superior.
Yeah. That's so true. And I think you get people that are obviously privacy aware. But yeah, we still use WhatsApp. It's completely unsecure. Everyone's on it. You hit the nail on the head, right? It's because everyone's on it. And if you can't get all your friends and your family and everyone to utilize a new messaging app, then it becomes useless to you. You're like, well, the primary function of what I need it to do, I can't do. Hey, I'm secure, but I can't reach the people I need to reach. And so it's like, it goes back to the that friction of like how much privacy are you willing to give away in exchange for convenience?
Or security. I mean, supposed security there, because that's the thing between, let's say, DeFi and TradFi, right? The autonomy aspect, the self-custody aspect versus, but it's more convenient to just use the banking app, and if I do something wrong, then I can contact the bank and they can try to recover those funds, and which is much more complicated in crypto. I mean, I think we've all been there. And so that's the trade-offs you have to make. And right now, I think all over the world we see this kind of struggle between freedom and security, and people are going can go in either direction, but I think that's a conflict, especially in the Western world right now, also between the parties, but the different political camps, let's put it like that, because in Germany we have a bunch of parties, so it's always hard to say that it's concept of a certain party, because some of them they're fairly similar in certain regard.
And then that's the thing about Germany. You are very much like you often have coalitions of parties to make governments, right? You don't have one political party. In the UK, we're not as bad as the US, I'd say. We have more political parties that have a voice, whereas the US is literally just Democrats, Republicans. That's it. The occasional independent pops up.
Winner takes all.
Yeah, basically. We do have more representation, but it is mainly the two big parties, the Tories and the Labour parties. It's kind of like you have offshoots of smaller ones. And I think a few years ago we thought we were going to have a similar system where we had the coalition between the Tories and the Liberal Democrats in the UK. But then after that, everyone was just like, nah, we were just voting for one party or the other. I don't know which system's better. I don't know. At least we have some power, I guess. It could be worse. It could be China.
I can tell you of pre-coalition governments that they don't really work, because the one we had from 21 to 24, it wasn't working at all. Because with three parties, there's always the odd one out that doesn't really belong with the other two, ideologically or politically. So there's always friction. So they never seem to be able to agree on anything, and that gives the whole government, the whole administration, a bad image in the public, because they're always bickering in the public. So especially in Germany, that's kind of considered a bad thing. I'm not sure it is, because I like having the healthy debates. But Germans not conflict shy, or they don't really like to have conflict averse.
I mean, I think understandably, Germany has a history of not.
But the conformity aspect, I mean, it's a totally different topic, a whole different book, because you can actually maybe say that the conformity aspect of Germans historically has led to back in the day led to certain developments, because nobody wanted to act up against that. So they get conformity. So that's a whole different discussion that we probably don't want to get into right now.
Have another couple of hours talking about that. But it's still very, very interesting. And I think, weirdly enough, I mean, we don't want to go into it too much. It all kind of marries into the whole autonomy, self-autonomy, and decentralized world of like, if your government does something you're not comfortable with, being able to kind of extract yourself from that situation, right? Because right now, if they wanted to, everyone keeps their money in banks, and ultimately governments have control of the banks. And if they wanted to freeze everybody's assets, they could easily. And it's kind of
there's the digital euro approaching, because they want to get this out as quickly as possible. So they're already talking about that. So that's not an if, but a when. So this is coming, CBDC, and depending on how this plays out, I mean, they might be able to install certain elements of the Chinese social credit system in Europe, and then they can freeze your funds, they can restrict you if they want to, and that's
I wonder if that relates to the party though. And I think, unfortunately, or maybe fortunately, Europe is too fragmented, I think, to fully, like, all nations to fully agree on something that I don't think we'll get there. That's my opinion. I could be completely wrong. I think they're a bit late to the party. I think the US has kind of just gone, all right, Tether is basically maybe not keeping treasuries afloat, but they're definitely helping with
Circle.
Another
big player.
And so like I think they USDC and USDT are obviously kind of like at the forefront of crypto, and everyone's just trading it. And I can see a world where we don't really use other currencies. We just use USDT or USD in some form of stable coin. And I think the US was smart into it now, at least, to kind of push for that, because I think
opening it up, because I mean, you have to keep reserves. I mean that basically the main requirement if you want to launch a stable coin in the US nowadays is that you back it one-on-one with reserves. Because I was talking about that actually with a pre-contact of mine who was actually looking into that topic in Arizona. So, and he told us in a meeting about all the requirements that he found and what you have to do in order to launch your own stable in the States.
I think there's a lot of companies now vying for that space as well. And Hyperliquid was a USDC. They basically had a deal where they would hold a large portion of USDC to obviously, like, and off of that, the USDC was making quite a lot of money on the interest, but now they basically put it out for bid because they were paying too much. And so now you've got all these other USD checked coins.
I think I didn't read the whole thing. No, but I think it was like just a few days ago that they said they were going to launch their own stable coin, USDH.
I didn't see that.
Yeah, and it's like maybe end of last week or so. Yeah. So that's why, because I mean they're I think the most profitable company per employee by far right now. So, yeah, they can afford it.
They're the biggest.
Average banking, but they can afford, like, even getting a banking license in the state. I mean, I think also depending on which state you apply for the license, and it might be easier to get it than in others, for example. So yeah, because of the federal system, so there's a difference between them. Same as with income tax, for example, and all of those.
That's interesting. I also like that. That's going to be a huge hit for USDC, because that was a huge portion of their earnings was from Hyperliquid specifically. And I wonder what that's going to do to the stock. Maybe it's not going to affect the stock, or maybe it starts selling when some people understand. Because I feel like a lot of people don't understand that's how USDC made a lot of their money via a decentralized provider. But it's crazy when you think about it, right? Because it's like this decentralized entity is what this centralized company is making their money from, a huge portion of their money from. And yeah, like I'm a big fan of Hyper, because I think
me too,
what they've done is incredible. And they've just they've just, I think that for me personally, and I'd hold, this is not me shilling it because I don't hold any, and I regret not holding any because there was a time when it was at like $20, I was going to buy a bunch, and I was like, yeah, maybe let's just see how it plays out. I think that's going to be one of the biggest runners.
Yeah, I bought a little of it between 10 and 18. So I think my lowest entry was like 950 or so earlier this year.
That's great.
Yeah.
Good buying. I still think it's, I mean, this is not financial advice, obviously, but I still think we are really early days. And I think that's going to be the biggest this run. We're going to see the biggest gain this run via Hyper. And just because of what it is. And I wonder if that model is going to be replicated, not so much for perps, but for like other things as well, because I don't think there's been any DEX that's been as big as Hyper is for
some of them, they're trying to become similar to Hyperliquid, lighter Paradex, for example. A couple that I then come to my mind, Flying Tulip. Have you heard of that?
I haven't heard of Flying Tulip.
Yeah, but it's a new project from by Andre Cronje that he wants to do TGE, I think, in mid to late October. Well, then that's supposed to be like an all-in-one DeFi platform, decentralized. So yeah.
But that's the risk of getting Hyper, right? Because they've done really, really well to position themselves as where they are, and you know, I've utilized it and I think it's okay. It's not the best. It's not the worst. It's nothing special, right?
Yeah. Okay, so what they've done, what I think was pretty clever, is that they offer you to buy BTC spot decentralized, and then you can transfer it to your Bitcoin wallet, so without having to go to any of the sexes. So
that's good.
Yeah. So you just deposit USDC on Arbitrum, you buy Bitcoin, and you transfer it out to your Bitcoin wallet, and vice versa. You can also transfer it into Hyperliquid, sell it there, and then get your stables out. So yeah. So one last reason to use decentralized players, similar as with the banks when we're talking about that. Yeah.
No, I agree. I think it's a great project, and I just think with other players coming into the space, maybe they get a bit. I don't know. I think they've got first mover advantage as being were they the first perp DEX or?
No, I think DYDX was probably before.
Yeah, it was. No, you're right. It was. I forgot about that, man. It's pretty back. So, yeah,
but they were reasonable about it. So yeah, incentivizing people to use their platform, doing the airdrop, and then pumping the token to buybacks. So because I mean that's been the model of this cycle so far, right? Among the best performing tokens. I mean, I'm not a big fan of Pump.fun, but yeah, they've started buying back their tokens, and
I mean,
you could see that. Yeah, but you've seen the pump. You've seen pumping as of late, right? So
that's why. Yeah. I mean, to be fair, like everyone's like, wow, this is where they do it, but like this is basically just Binance's playbook. They've been through this for years. Obviously, now though, it's just a decentralized version of it. But it's very interesting. I wonder where all these centralized exchanges are going to end up, right? I think they're still needed. I think Coinbase will always be needed because I think Coinbase is pretty much where everyone offloads or on ramps. I think if you're new to crypto a lot of the time, but yeah, some things like Binance, KuCoin, OKX, you know, I wonder what the future holds for them. Is it just like everyone's happy to utilize them because it's a very crowded space, but the flip to that is you don't need a huge user base to make a lot of money, right? Because it's
as long as you can get some whales in there that create some trading volume that you can basically participate from and can get the fees from, and working with market makers, maybe getting some fees from them, and so I mean you probably don't have to scale it all the time, but it's probably maybe why some smaller exchanges might actually be better off, you know, because they take
to them under the storm.
Yeah, and they don't have that much overhead. So
that's true. They probably only have a few. Yeah, well, cool. I really, because our time's kind of like run out, but I really appreciate you taking the time today to chat with me and stuff. There's been some interesting stuff.
So yeah, but let's just let me get back to the DAO things for the last 4 minutes, because we were talking about that earlier. So I told you, right, that one of my projects is a DAO. So what I'm part of is the first veteran DAO in Web3, first and largest. So we basically we're between an investors group and kind of social project, if you want to put it like that. So because we have the DAO, we even have our own crypto mining pool, for example, and but we also have a 501c3 in the States, so foundation, so that helps veterans in need with with access to mental health services, to Medicare and Medicaid, because we have partnerships with them. Same with Walmart and American Legion, and so we get access to food banks. And what our goal is that we at some point we can build a retreat for them with tiny houses where we can get them off the street, for example. They're homeless, so, and we can upskill them in their own training center. So that was the idea behind it, and so that's still operating.
That's cool. It's really cool. What's the name of the DAO?
Dogface DAO.
Amazing.
And so that's we were also working closely with Satoshi, because the founder of Dogface DAO is also the man with the vision behind Satoshi. So
that's awesome. That's really cool. And I like the idea behind the DAO. To just essentially get people off the streets, upskill them. Like,
and
how can you can't be mad at that?
And then that's was how I got my first jobs in Web3 on the builder side, because we released pre-collections on NFT collections on Ethereum, and then the Runes token last year, and then now we're about to launch an Ordinals collection. They give you access to Satoshi, by the way. So I can plug it in there. So just a little show on the back end.
Oh, no, nothing more than that. Thanks. Appreciate it. Thanks very much. And if there's anything else you want to add before we go, or